Dear students, we are in module 13 where we are learning bill of exchange. So in the last module we have learned what is bill of exchange, what are the features, distinction between promissory note and bill of exchange. All the theoretical concepts I have explained in 13.1. Then the second module what I have explained is bill of exchange and usual procedure, that is it's honored on the date of maturity. Another option is if they are not ready to wait till the date of maturity, they are endorsing it to another party for their credit purchases. So up to this we have explained. Now this module what I am going to explain is discounting bills and sending the bills to bank for collection. So when will discounting the bill happen? See, for example, if I am getting a bill and it's 3 months, dated 3 months, I am not ready to wait for 3 months to get the payment. So what I am going to do, I will discount the bill with the bank. So that is discounting. So this module, one option what we are learning is discounting bills. Second one is sending the bill for collection. On the date of maturity, we are sending to the bank for collecting the bill amount. So these two more concepts we are going to explain. And in this module, 3 problems are worked out. One problem is for calculation of interest or calculation of discount, whatever the discount charged by the bank. And 2 problems for explaining the journal entries for both these transactions. So this first one is what is discounting. I am going to explain. Drawer gets a bill duly accepted by the drawee. So this concept we have explained. In the credit transaction, drawer, drawee. So we have 2 examples, Ram as drawer and Sham as drawee. So they are getting a bill. And then drawer can wait for the maturity date or discount the bill with the bank. So if the bill is due for 3 months, so Ram will not wait for 3 months because he may have to do other transactions. So what he will do, he will discount it with the bank. So bank will charge a nominal amount as discount and the remaining amount Ram can collect it. So discount charge for the period for which amount is advanced. So 3 months, the bank will have the calculation, how much discount. So that amount they will take and the remaining amount will be paid to Ram. And on the due date, now bank has to collect the amount from Sham. So they will send it to the drawee. In our example, drawee is the Sham. So then the bank will send the bill to Sham and he will collect the payment. Now accounting treatment in the books of drawer. Drawer in our example is Ram and drawee in our example is Sham. Previous 2 modules also we have explained with the same names. So first one is when the bill is drawn by Ram and accepted by Sham. Bills receivable account debtor to Sham's account. So that is being the acceptance of the bill received. Second one is when the bill is discounted with the bank. So this option, we are discounting the bill. Ram is discounting the bill with the bank. So journal entry is cash account or bank account debtor to discount account debtor to bills receivable account. So whether he is collecting cash or it's credited to bank is crediting the amount to bank. Usual procedure is bank will credit the amount to the account holder. So that is the cash or bank account debtor, discount account debtor to bills receivable account, being the bill discounted with the bank. Now important 2 points you have to remember. Journal entries for discounting bills are recorded only in the books of the drawer. In the books of drawee, there is no journal entry with regard to drawee because he is not concerned with. This is a transaction between Ram and bank. Sham is not in the picture. So we are not making any entries in the books of Sham. Now first problem, as I told you, how we are going to calculate the discount, because this type of problems we have to calculate the discount. So this 5 examples are there, how you calculate the discount. So this is what I am explaining as the first problem. Anne draws a bill on Anil for 30,000, for rupees 30,000 on January 1st, 2021 for 3 months. Anil accepts the bill and sends it back to Anne. That means the bill is honored. The bill is discounted by Anne. So Anne is not waiting for 3 months. She is discounting with the bank. Calculate the interest in the following cases. So first one is bill is discounted for 29,500. Only in the first option they are giving the direct amount. That meaning 30,000 minus 29,500. 500 is the interest or the discount charged by the bank. Other 4 options they are giving the date only. Bill was discounted at 10% on January 1st, 2021. Second is bill was discounted at 10% on January 4th, 2021. Third is bill was discounted at 10% on January 4th, 2021. Next is bill was discounted at 10% on March 4th, 2021. So the first one I told you, the bill amount is 30,000. Bank is giving 29,500. So the discount value is 500. Second one is January 1st they are discounting. So that meaning 30,000 into 10% is the rate of interest into 10 by 100 into 3 by 12. 3 months is the date of the value of the maturity period for the bill. So 3 by 12 the value is 750. So the second option discount is 750. Third one is January 4th the bill is discounted. That meaning discount is 30,000 into 10 by 100 into 3 by 12 is 750. So in the previous case January 1st also we are getting the value 750, and in the third case also we are getting 750. Now how these values are same? So that is discount is charged for the period between the date of discounting and due date. You know that January 1st 2021, January 1st they raised the bill. Period of the bill is 3 months. 3 months and 3 days of grace they will get. So the maturity date is April 4th. So January 4th to April 4th it's 3 months. That is how we are calculating for 3 months. This is important. You have to remember that interest is calculated for 3 months. Next is February 4th. So discount is how you calculate. February 4th, that means March 1 month, April 2nd month. So we will calculate the interest for 2 months. So February 4th if the bill is discounted with the bank, meaning discount is equal to 30,000 into 10 by 100 into 2 by 12, that is 500 rupees. So here discount is calculated for 2 months, that is February 4th to April 4th, 2 months. Next is March 4th if the bill is discounted, then it's only 1 month, March 4th to April 4th. Discount is equal to 30,000 into 10 by 100 into 1 by 12, that is 250. So discount is calculated for 1 month, that is March 4th to April 4th, that is 1 month. Now the problem 2, this is I am going to explain the journal entries. So Anil draws a bill on Anish for rupees 40,000 on March 1st 2021, payable after 3 months. So the date of the bill is March 1st and the value of the bill is 40,000, it's for 3 months. Anish accepts the bill and returns it to Anil. So the bill is accepted. Bill was discounted by Anil on March 1st at 10% and duly met on the due date. Pass the necessary journal entries in the books of both the parties. So discounted but duly honored. So journal entries in the books of Anil. Bills receivable account debtor 40,000 to Anish's account 40,000. It is a credit transaction. So being the acceptance of the bill received from Anish. Now March 1st same transaction, he is discounting the bill on March 1st. So cash account debtor 39,000, discount account debtor 1,000, to bills receivable account 40,000. Now how we got this 1,000 rupees as discount I have calculated. I will explain that. Being the bill discounted for 39,000. Now journal entries in the books of Anish. So that is to 2021 March 1st. Anil's account debtor 40,000 to bills payable account 40,000. Anish has to make the payment to Anil. So Anish, for Anish it's bills payable. For Anil it will be bills receivable. Now June 4th, it's 3 months and 3 days of grace. So March 1st meaning April, May, June. June 1st will be 3 months plus 3 days of grace. That's why you have to remember the date is June 4th. So bills payable account debtor 40,000 to cash account 40,000, being the payment of the bill made. Bill was paid on date. Now how you calculated the discount? 40,000 is the date of the bill. 40,000 into 10 by 100 into 3 by 12. See, March 1st, the date of the bill itself, he is discounting with the bank. So 3 months. The period of the bill is 3 months. So 3 by 12, 1,000 rupees. That is how you are getting 1,000 rupees. So no journal entries are passed in the books of Anil for the payment of the bill, because now it is between the bank and the Anish. So that is it's not recorded in the books of Anil. Now Anil gave the possession and ownership of the bill to the bank. So Anil is giving it to the bank. Now bank is collecting the payment. So Anil is not in the picture. Bank will present the bill and receive the payment. Now sending the bill to bank for collection. So one option I told you, we are explaining 2 modules. One is discounting the bill with the bank, and second one is sending the bill. You are involving bank for collecting the amount. So sending the bill to bank for collection, what are the journal entries? So in the books of drawer, Ram and Sham is the drawee. So when the bill is received, is sent to bank for collection. Bank for collection of bills account debtor to bills receivable account. So that is being the bills receivable sent to bank for collection. Next, in the books of Sham, bills receivable account debtor to bills for collection account, being the bill received for collection. After collection of the bill, bank account debtor, bank charges account debtor to bank for collection of bills account in the books of Ram. In the books of Sham, bills received cash account debtor to Ram's account. So he is making the payment, being the bill collected on maturity. Now the last problem we are going to do to explain this transactions what we have explained now. On April 1st, 2021, Lakshmi sold goods to Mohan for Rs 25,000. On the same day, she drew a bill for the amount 3 months. Mohan accepted it and returned it to Lakshmi. She retained the bill till maturity, and on the date of maturity, she sent the bill to the banker for collection. So the bank informed her that bill is duly collected. Pass the necessary journal entries in the books of both the parties. So on the date of maturity, without any payment, the amount was paid for the bill. So this journal entries in the books of Lakshmi. So 2021 April 1st, the date is important because when the payment will come, date of maturity we have to give as the date. Now the bill, the date for drawing the bill. So Mohan's account debtor to sales account 25,000, being the goods sold on credit to Mohan. Now same thing, they are not making the payment, she is getting only a bill. So bills receivable account debtor 25,000 to Mohan's account 25,000, being the bills receivable drawn and accepted by Mohan. Now on the date of maturity, July 4th, that meaning May, June, July, 3 months. April 1st the bill she is getting, and the due date for the date of the bill is 3 months. So July 4th only. July 1st plus 3 days of grace, that is how we are getting July 4th. So bank for collection of bills account debtor 25,000 to bills receivable account 25,000, being the bill sent to bank for collection. Now July 4th, bank account debtor 25,000 to bank for collection of bills 25,000, being bills receivable collected by bank on maturity. Now in the case of Mohan's account, Mohan's book, what all will be the journal entries? First is when he is making the purchases, credit purchases. Second, when he is giving the bill. Third is for the payment. So that is first transaction, April 1st, purchases account debtor to Lakshmi's account 25,000, being goods purchased on credit. Second transaction, when he is giving the bill to Lakshmi, Lakshmi's account debtor 25,000 to bills payable account 25,000, being the acceptance given to the bill drawn by Lakshmi and payable after 3 months. So now the payment, so that will come only on July 4th. April, May, June, July, 3 months plus 3 days of grace, that is how we are giving July 4th. So bills payable account debtor 25,000 to cash account 25,000, being the amount of the bill paid on maturity. Now one important point you have to remember, Mr. Mohan is not concerned with sending the bill to bank for collection. Lakshmi is sending the bill to bank for collection. So hence there will not be any entries in this regard in his books, because please remember that Lakshmi is sending the bill to bank for collection because Lakshmi has to collect from Mohan. She is not directly asking, she is involving bank. So that is how there is no journal entry for collecting the amount in the books of Mohan. So this you have to remember, this is the module I want to explain, discounting the bill and sending the bill to bank for collection. And I am giving extra problems in the description box for you to work out, and you have to practice by doing more problems. So then only you can be an expert in the subject. More you practice, you will get more experience. You will be more comfortable to write the examination. That's very important. So this give me a valuable feedback and suggestions, and promote my channel, and happy learning with Dr. Alice Mani. Thank you.